G'day everyone, welcome to the weekend global update for stock markets, and this is the same question that I posed last week. Has the correction finished? And we certainly had a much more positive week in the week just gone. Tensions with Russia eased off a bit and markets rebounded quite strongly. So it certainly has raised the possibility that the correction has already finished. I've probably moved from 70-30 against to maybe 50-50 at this stage, and there's certainly another display of very strong underlying buying in the American market. So let's have a look at what transpired last week. The S&P ended up gaining 24 points on the week. It was nothing spectacular, but it was certainly a useful rebound, and it's largely around easing tensions with Russia. Now, the area of support that I was looking for was 1900 to 1920, and so far that has held, and it raises the question, has the correction finished? And as I said earlier, I think it's a 50-50 bet that it has. This is the S&P 500. You can see this little box in green is the area that I was targeting. The price of the S&P 500 index managed to decline just to the top of that little box. We've had a bounce. It's possible we could get another leg down, but it's also possible that we could just continue to move back up to the all-time highs or even form new highs. As you can see, we've had really no ABC type corrections all the way through. It's just been one dip to somewhere a little bit above the 150-day moving average, and another one, and another one here, and another one here, and it's just gone straight back up again without anything of any more substance. So given the strength of the American reporting season, given the way their economic data is coming through, there is absolutely no reason for the US market to have another leg down. It's only that it's the time of year when you tend to get some weakness during American summer holidays, when the turnovers are way down, that sometimes you get a little bit more weakness, but certainly no guarantees that that will happen this time. So still looking quite positive. Turning to the Australian market, our index ended up by 122 points for the week, which reversed almost all of the previous week's losses. So that was quite positive. We were down about 140 points the week before. Now, in that prior week, banks had had a hard time and miners did okay. Last week, that was reversed. But I do want to point out that Commonwealth Bank and ANZ results showed a distinct weakening in the second half of the year. And that's really telling when these stocks are basically trading at historical PE ratios. The Australian economy is certainly facing some headwinds. It would appear that there's a number of things working against the banks. Their margins are coming under pressure. You're looking at, they're probably at an absolute low point in terms of bad debts. They've been reducing their provision for bad debts, which is what's been increasing their profits. That process is probably going to stop, and in fact, bad and doubtful debts may start to go up, which will impact on profits. So I think there's every chance that the Australian banks could really struggle from here. Now, because they're so attractive from a yield point of view, they may not go down, but if you're an owner of bank stocks, I'd be cautious at the moment. Let's just quick look at the commodities. Gold ended up down $5 for the week. It did get a little bit of volatility happening, particularly in Friday's session. Had a sharp dip under 1300, but then managed to recover it. But gold stocks held their ground pretty well. Silver had a shocker, particularly on Friday night. So I really don't know what's going on with silver. It should be doing better than it is. So that's a bit of a mystery. Copper eased back to $3.13. I think that was a little bit about strength in the US dollar. And crude oil got down to about 95, but managed to rebound a little bit on Friday night to 97. Let's just have a quick look at the Australian index. So we'll look first of all at, this is the finance index, so still in uptrend. And you can see we had a very, very sharp decline 2 weeks ago and then a pretty good recovery last week. looking at the overall ASX 200, again, it pretty much reflects what we saw in the banks. And if we look at the miners, then a little bit less of a rebound than we saw with the banks. So all in all, the Australian market still holding near its recent highs, but certainly not anything marvellous. And I would say with bank valuations as stretched as they are, given the circumstances, it's pretty hard to see the Australian index going much higher than where it currently is. There's the spot copper chart, still sitting in that range between 310 and 325. Nickel, similarly, after a 50% rise earlier in the year, has basically just flatlined over the last few months. So the overall strategic approach is exactly the same as I laid out last week. It's we're looking at a month or two of softer markets. The American holiday season ends in early September, so I would expect maybe another 2 or 3 weeks of this low turnover and perhaps some volatile action. And it's just all part of the normal mid-year slowdown that we get. So I'd still see it as a time for caution, very much a time for positioning. The US market may have bottomed, but things could always hot up again in Ukraine. We've got all sorts of issues in the Middle East, so there's still triggers out there that could make markets that are thin in terms of market depth, could make them a little bit harder to negotiate. But I must point out yet again, and I know I keep hammering this point, but there is just staggeringly good value in high growth companies in America. You can get fabulous growth rates at significantly lower PE ratios than you can in Australia by a country mile. So if you want to make the most reliable gains and make the most robust gains, then certain sectors of the American market is where it's at. For any non-members who would like more information about what we do and the information that's provided, there's our website and there's my email address if you'd like to correspond with me. That's it for this week. Cheers.